Okay, let's talk some price action. Weekly profiles. So we have 8-week news week. Let's jump straight into the charts. First, look at the economic calendar. So I want to recap this week on Wednesday. Just a beautiful setup. So framing for the week is we have our first large news event at 9:45, but obviously we're going to use weekly profiles to frame out the price action. We're anticipating that big injection Wednesday. We also know in the background, not on Forex Factory, something super important is going to be earnings reports. Who's dropping their earnings reports? What's the sentiment? But we're going to focus on the market mechanics. So with that in mind, framing for weekly profiles, best tips I've always had is use the Monday range, previous week's range, and a new week gap. Monday's range, previous week's range, and a new week gap. In fact, let me just put that up, because I can't tell you how vital these things are. So Monday's range, previous week's range, and a new week gap. So all ICT stuff. And so let's just frame this out. 15-minute chart. Let's go up to the hourly. Hourly chart. Previous week's high is the pink line. Previous week's high, previous week's low, right? So we framed out the pink line. We had a bearish run all through last week. This week, we then started off on Monday. We frame out our new week gap. New week gap is not a PD array, it's just a marker in time. Additionally to that, we have Monday's range. So already we know the week is not kicking off any high impact news until Wednesday. So what's the rush? Don't worry about Monday. Let it go, let it flow by. So at this point, Monday is the gray. This gray, let's make it a little bit bigger just for now. So we start off the week, new week gap gets completely filled in. We have a true gap here. New week gap is using regular trading hours. Still frame it out on the electronic trading hours chart, but you frame it out, right? And if you don't know what new week opening gap is, check out ICT's video. It's effectively on a 15-minute time frame. You want to find 6:45 from Friday and 9:30 on Monday, and that low on Friday and the open on Monday is your new week gap. It's just a bookmark. Think of it as a bookmark on price. If we're above it and we're trending above it, then you can use it to say, oh, we're bullish to the new week opening gap. If we break below it and you say, oh, we're bearish to the new week opening gap, it's just a bookmark in price. So Monday's range, we open up on Monday. We then do a Tuesday high. So we can see we have this smart money reversal kind of going on here on Tuesday's high. Then we slide on Tuesday with earnings from, I think it was Google. So Google earnings kick off, and then we have Tesla earnings later on in the week. But we have this negative earnings. Now we're using this information and framing it on market mechanics. So the previous week's range is in pink, Monday's range is in gray. Easy enough. This dotted line is the previous day's range. And this previous day's range becomes very important as you get into the Tuesday, Wednesday, Thursday operating days. And it became super relevant more recently, but it is like catnip if you're trying to frame up your weekly profile. So let's look at this from just like a logic standpoint, right? I'm gonna come out of the screen. Let's just stick this in replay mode before we start today. So we open up Wednesday, right? We're waking up for the morning, getting ready for New York. And what we see is that price is floating around the base of the new week opening gap. We have a Tuesday high, and with this wick below Monday, we potentially could have a Wednesday low. So we're caught between a situation where liquidity has been taken on both sides of the market of Monday's range. So Monday's range has buy side taken, and up at this point we also have sell side taken. So as ranges go, we've seen price clear buy side, clear sell side, and now we're wondering where is it gonna go next. Is it going to come back into the range and go higher, or is it going to break below the range and then go lower? So we need things like the previous day's high and low to help with that. And this is where that concept of time is going to be so important. You need, from a weekly profile standpoint, you need to be tracking your previous day's information. You need to be tracking price action after 7:30 before New York. So let's get out of replay mode and talk through what we saw here. So this area is where we're going to zoom in real quick. I mean, it is just absolutely beautiful when you go down on a 5-minute time frame. We are going to mark out Asia, and then once the news liquidity pushes through, we're going to use lunch. I also want to talk about this green box. What is this green box? Why is it? What is it? When you have a weekly profile, the beautiful thing is as you start to see the intention for the week, you can use Monday's range for projections. It's not new stuff, but it's so important to remember. So standard deviations of 2 to 3, I really like that whenever we see these kind of expansive weeks. Midpoint, that would be 2.5. That's what that dotted line is. So from the sentiment being confirmed here being bearish, we can mark where do we believe price will trend to. And today it worked out like gangbusters. So 5-minute time frame. Let's take a look at this price action. So Asia consolidates. We have a bearish move down. In a lot of respects, this whole price action could be tempting for a sweep, kind of like a choppy price action movement. And here's where we have to frame the day. So as price is making this choppy movement, we see that the sell side keeps getting taken, buy side fails to get taken. So there's this concept about defended highs, defended lows. It's like when you think about SMT, what's the thing that didn't sweep? Well, that's the one that defended the high or defended the low. So to be more specific, when you have these highs and lows, and SMT would say that, let's say you have two correlated markets, and you've got highs, intermediate high, one takes the high, sweeps, shifts, goes lower. Then you have the other the correlated market where price fails to take the high, shifts, and goes lower. So that's effectively our SMT, right? We've got our high, higher high, whereas in another market we have the high, lower high. So when we're looking at price, there's intermarket relationship, but you can tell a lot just from the asset you are trading. SMT is great. This is not knocking SMT. All I'm saying is that there's a lot of price action that can be told just from the chart you're reading. So let's take a look at what that means. So 7:30, very, very key marker to determine when you want to act. You need Asia from a New York trader, talking to myself here. You need Asia, you need London. And from a liquidity standpoint, we have this low, and we have this internal low. And if there was a desire, right, think of it as an Asian range with a London normal protraction, I want to go bullish. If that was the intent, then we would need to see price action starting to break highs. Now, dotted line, key level, previous day's low. You can see the sensitivity, like after midnight. This was a level coming back from yesterday, right? So we're using that 12 to 12.05 because it's a 1 hour chart, so you're using the lowest low. So that low, you can see that sensitivity all the way through this price action. 7:30 is your time to look and see where do we want to be. So in this moment, we are having highs left unfilled and lows left unfilled. So we have one sweep, and then now we're staying coiled. We get one high that breaks but stays internal. Just like we have a low, an internal low swept. So here at 7:30 is where that price action pattern is like coiling, ready to spring. And what we're watching for is structures like this, where you have a high that's taken, but the external high or the next high is not. It's like your intermediate and your short term, right? So that's ICT 2022 video 12, I think. So here we have this low swept, external saved, basically engineered lows. Then we have a high swept, external saved from a buy side standpoint. So as price at 7:30 fails to make these moves higher, we already have the sentiment that we're bearish. We already have a Tuesday high. We're trying to determine if this is a Wednesday low, which would mean we're shifting back into the range, or if we're looking for something as a Tuesday high, which is going to push higher. So let's just quickly break down what that is. So let's take all of this off and let's give ourselves a very quick reminder that a Tuesday high can start off with a Monday. We have a Tuesday high, and then we're sliding all the way through the range of the week to basically Thursday, and then we might have a kick up on Friday, right? So we're framing that price action where Monday's range gets swept. We make a high of the week Tuesday, call it a smart money reversal on Tuesday, and then we're pushing bearish, and then we might have a kick up on Friday. Compared to a Wednesday low, which can still have Tuesday being a little bit higher, Wednesday takes the low, and we come back into the range to take Tuesday's high. So we have these two profiles in play where that Monday high was taken, but we don't know if this is a Wednesday low or if it's a Tuesday high where we're going to maintain that bearishness. But we do have a better inclination after 7:30. So at 7:30 we're watching several things. We have to keep this level in mind from the previous day. We take the buy side internal, don't take it external. And then what do we do right after 7:30? Start breaking down below the previous day's low. So right here is enough of a signal to say we are not pushing higher to create any sort of breaker or order block or fair value gap that we want to have as bullish. Instead, we're seeing a rejection to take the high, and we're starting to see a price action shift to the lows. Most aggressive entry 7:30 after you take that level. You also have inversion levels that you can look at as prices sweeping through those levels. You're coming back up, or you're looking at this order block right here. Inversion levels are a little bit more complicated, but they're there, right? As price breaks through it, we revisit it, the high never gets touched, we get one more confirmation, we wick back up into it. So that inversion order block is what we're looking at. There's a fair value gap on the downside, we shift above that green candle is where we could invert. This BPR is also fair play. There's a lot of stuff in here, but that's a fairly early entry given that we've got 9:45 news, etc., right? But we now have our sentiment. Once we see this price action here, even before the 9:30 open, we are already ready to go for a Tuesday high. So as 9:30 opens up, we already have our larger time frame sentiment on the day, bearish. We are not looking for this liquidity to be taken anymore. These price actions taking internal but not external buy side, building that engineered liquidity on the downside. Now we have this move lower. Easiest way, previous day's low. Previous day's low is so powerful. You get this move down, you're like, okay, I'm bearish. I don't need to worry about this being a reversal because I now can see after all of this choppiness through London, I have broken below the previous day's low. I have my larger schematic at play with a Tuesday high, which swept above Monday's high. So much beautiful price action today. So not only are we tracking where we're coming from, we already have our sentiment of where we're going to. We've knocked out two massive pieces of the puzzle, which is okay, what's my sentiment and where am I heading towards? The next thing is like, how do you get in? That's the biggest challenge. Alright, easiest one to mark out here, 2022 model. We have a high taken, 930 open, very bearish shift, fair value gap left, nice and easy. Let's go up to the 15-minute time frame. We're also gonna just scan through this consolidation here. You can see that 930 pops into this fair value gap, and if you're an old low type of trader on your TGIF matrix, you can see when that old low gets hit inside that fair value gap, that's a good confirmation. Now, a lot of this price action I would say is fast, and for myself, trying to catch this was that it wasn't easy, and so my next opportunity is going to have to be after the lunch range. So let's jump into that from a journal perspective. So we frame out where we want to go. This is green box, so let's take off a couple of levels here. This is the 2 deviation, the 3 deviation, and I'm splitting that. I always split it into, I take it between 2 and 3, I split it into, and I'm just saying that's my most favorable. So let's pull that back a little bit and just clear up some of this price action here. All right, previous day's low, previous week's low, pink line. We see the 930 rejection, jump back up into the fair value gap. You can see the sensitivity around the previous week's low, and then it's just a sell-off. Now, how you get in, you could try going on the 1 minute and trying to figure things out in the AM session, but I find that I'm gonna call it conservative because it helps keep sanity. Is like, use a time-based range. Use a time-based range to help you say, okay, I know when I'm going to act, because that is equal parts the decision of like, how do I even get into this trade, and maybe something that is helping, that I know has helped me and help somebody else in terms of over trading. There's going to be another bus, but what does that mean when ICT says don't worry, there's going to be another bus? It's like, is it the next candle? Or maybe if you're a 15-second trader. But from my perspective, having a time-based range, framing the AM session, the PM session, and therefore using the lunch range, I think that's like the easiest thing to help you through. Alright, so it's a 2-session down close, fairly straightforward. As expected, you would expect a 2-session down close. Let's frame up what are some of the key things in a 2-session down close. So from a schematic perspective, we are looking for some form of liquidity to be taken from the AM session. So let's see if I can map this out. Let's say, I'm gonna go back to the screen there. Let's say you have price action coming into lunch. Simple schematic, you have a high, we go into lunch, and throughout lunch you're waiting for that high to be taken for price to then go lower. So what I'm saying is you're looking for some form of buy side in the AM session, so meaning before lunch started, 12 to 1 standard lunch protocol. You're looking for some buy side to be taken and then price to make a shift lower. That's what you're looking for. Inside of this schematic, you'll notice, let me just pull it up, just throw this on the 2-session down close. So this is what I'm talking about. Inside that lunch, you're looking for some form of buy side just before lunch. You're looking for that to get swept. You could have lows being swept, you could have the AM low being swept, that's all fine. What you're looking for in a bearish 2-session down close is for some buy side in the AM session to get swept and then to give some sort of shift, right? So we got it, right? Buy side to be swept. We're looking for a bearish market and buy side to be swept. We need to have a bearish market proceeding in the AM, leaving some sort of high, and we're looking for that buy side to be swept. Check. So here we go. Lunch range. We have a ton of buy side all throughout this level. Buy side here, side here, buy side here, buy side here. So we don't know which one's going to be swept. But what we want to see is, as we're coming out of lunch, we want to have one of those buy side areas swept. So we get that. There's a sweep right here. It is so subtle, and for anybody who is not practicing intraday profiles or weekly profiles, I get it. Sometimes it just doesn't seem reasonable, but just follow me here. So we're gonna go down to the 1 minute time frame, and here's something that can also help in terms of like trying to project where those levels are. So inside your lunch liquidity, and just follow me along here. This is my journal entry. I am doing this because I am very comfortable with this information, and I'm putting it out because I like to track my progress, and if it helps anybody, all the better. So these sweeps that will take some form of liquidity on both sides, right? Take some form of high, take some form of low, are great levels to use as projections. So why am I using it in here? It's because it's the lunch range, and if this is going to be a 2-session down close, it needs to take some form of buy side. It needs to take some form of buy side in the AM session. I'm on the 1 minute. I'm running my standard deviations on a swing that takes both a sell side and a buy side. So the one that is preceding that run up. You're looking for that projection as a basis to say price should get up there, and that's where I would want to see a close buy side. So projections continue. Obviously there's this one, there's this one. So as price is coming out of lunch, I'm waiting to see which one, because I don't know which buy side exactly is going to be taken. I know the schematic calls for it, some form of liquidity to be taken. You'll also notice, just like the price action that was marked out in the morning, this is very tempting to look at as reversal. It's a choppy price action. We have this push up, but this push is not real. It's going to grab liquidity to then shift lower. Like, it is so important to understand how these liquidity mechanics work. So the temptation for some could be, well, we got to the target area, green. We have lunch, which is shifting, quote unquote, bullish. And now I want to enter. I want to enter down here. I see this as a retrace because this is a market structure shift. It's not, but it looks like it. And then when I see this bullish run, I'm thinking, oh gravy, it's on, but it's really not. It's just gonna take you out, and it's gonna spike down to where it ultimately wants to go. So how do we avoid that? Well, we have to use things like time-based ranges, and time-based ranges are beautiful because they can set the liquidity levels that need to be used. So just like every other time-based range, if we have a time-based range, high and low, it's going to behave in basically 3 ways. One, we are going in a bearish example, we are going to sweep the high, come back into the range, revisit some sort of level, and then tackle bearish, right? So that's your typical like 2022 model. There's a time-based range before right around 8:30. We see that high get taken. we displace, we shift, we take out some form of sell side, then we retrace. Now we're back inside that time-based range. That's why the time-based range is so important, because you need to know which high and low am I using based on the time-based range. So I love using previous week, I love using previous day, I love using Monday, and then the NWOG is not a time-based range, but it's a good bookmark for the weekly profile. Second thing a time-based range is going to do, so that's one version, right? Second thing a time-based range of the three is that, again, it will make a low, make a high, make an intermediary low, break, trace, and break. Like it's going to continue. So let's make that a bearish example, because I was talking about bearish here. High, low, makes a low, breaks the low, revisit, and go. Bearish, right? It doesn't sweep and then come back in and then go lower. It can, but what we're expecting is that it doesn't sweep. It doesn't sweep. Lunch range, it does not sweep lunch low. It stays internal. So when price makes this bullish move internal on this time-based range, if we wanted it to be bullish, we would need to see it break the high of the range. So in this example, internal, we would need to see it break the high of the range to revisit. Until then, we're also anticipating it could do this. Sweep the high of the range, come back inside, and go bearish. So after that buy side gets taken, using that projection, we can see that we sweep the high, we come back into the range, we make a very deep retrace. I mean, I would have seen this leg. So my entry was on the projection, but I would have looked at this leg and said, okay, well, I would see several areas that I would use as a premium array. This fair value gap, this order block, that I would not be expecting the rejection block because there's so much inefficiency in this leg. But still, the high is defended. If your stop is above the high, or a few handles above it, you're fine. Like your trade setup is fine. If it were to break that high, then you have a different story. But just paying attention to the time-based ranges, like why this high, why this low, is because of the time. So at 1, as we come out of the lunch hour, we don't see the low getting swept. Yet we have this bullish move. So it's a wait and see. And we already have the macro 2-session down close, bearish sentiment. We have all of that in the background. So when price pierces the lunch range high and then rejects, then the sentiment is going to maintain a 2-session down close to go further into this target area. So framing that out, having the time-based range, if this first one was missed right around here, so all the way up here, if this one was missed, 930 was missed, 2022 model was missed, news events now play out, waiting, don't get caught in the chop, use your time-based range. Time-based range gets formed, you see the sweep up, reject back inside of the range, looking for some sort of displacement. It goes aggressive. I cannot deny that. It's not a pretty we can go type of scenario. Doesn't clear the high though. Rejects. Now even in this schematic, if you were bullish and then you see these failures, it's the same concept of what's the manipulation leg. So in this manipulation, this order block would be seen as fair game. So obviously as price breaks, I say obviously, but you know, hindsight is always 20/20, but incorporate this as a journal entry so that you can get better at identifying it. Even if this was believed to be bullish, when it fails to take this high, again, same story, internal, external, defended, taken, defended, reject. Order block, fair value gap, these levels that are getting broken get inverted, gets broken, get inverted, touch, touch, wicks, 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 drop down. Next level, of course, is if you take it on a larger scale, is the lunch low. So you can see the lunch low gets broken here. And just like we were saying with ranges, break, revisit, shift, break, revisit, shift, right? All the logic is the same and it's all based around ranges, and I'm calling them time-based ranges because they are the high and the low between a certain specific period of time. Lunch-based range 12 to 1. Previous week is obviously Monday to Friday of the previous week. Previous day, midnight to midnight. All ICT concepts used to frame out where, when, and why. And the next thing is what. Using all the PD array matrix is great, but favorite ones for me are like inversion levels, order block inversions, love breakers. Really love breakers. Those are always fun. And so you can use whatever pattern you want to get in when you start to have the market mechanics. And then the last thing, so just for this diagram here, the last thing of course is just seeing that nice beautiful run, and as always 355 is when close up shop. You can see we touched that beautifully. 355, 356, we start to reject outside of it and we're out. So we use the previous day for tomorrow. We're keeping the Tuesday high in mind. We're looking to see what the news events for tomorrow will bring, and then we'll see if we have a Thursday rundown or if we start the Thursday run up as the Tuesday high profile calls for, where we have a small kick up on the back end. And just for completeness sake, here is the Tuesday high from ICT's content. So what I'm talking about is here, whether or not we'll see Thursday and Friday give a small kick up, or if we're going to see Thursday continue a bit of a bearish run or maybe even consolidate. There is news, like we talked about. There's news tomorrow right at 8:30. So we'll see GDP, unemployment, and then Friday we have another 8:30 news. So love 8:30 news. That makes the 7:30 activity sometimes even juicier. So we'll see. It was a beautiful day today though. A lot of beautiful price action reads off of several levels, but hopefully this time-based range discussion, weekly profile discussion, intraday profile discussion is helping somebody else. I know I'm enjoying it. I love looking back at my journal entries and just seeing the growth in my technical skills, but also the psychological side. So until next time, do it again.